Imagine $37 trillion in debt wiped out overnight. No inflation risk. No default. Is this a dream? Is this magic? I don't think so. The Kremlin top advisor is saying that the United States is implementing some sort of gimmick to wipe out their debt using gold and crypto. But what if this gimmick actually triggers a doom loop of inflation? Stick around. I'm going to give you my thoughts from a very neutral standpoint to let you know if this is real or if are people just panicking. Welcome back to the channel. I'm your host, Ali, and if you're new here, hit the subscribe button and the like button on this video. We cover different types of stories from micro to macroeconomics, as well as stock analysis. So make sure you don't miss any of those videos. Today, we are going to dissect the bold claims by the top Kremlin advisor, Anton, I can't spell his last name, and other US YouTubers that are panicking, saying that the US is attempting to erase a massive amount of their debt by issuing treasury bonds pegged to stablecoins and then devaluing them, as well as revaluating gold prices under a gimmick inside the Federal Revenue Agency's accounting book under Section 2.1 to add a massive amount of money into their coffer. We're going to explain each step's feasibility, examine legal hurdles, and share actionable investment strategies for beginners and intermediate investors. Let's get into it. Today, the Treasury holds 260 odd million ounces of gold valued at $42-ish an ounce from back when, way back when. Now, what they could do is they could revaluate gold to $20,000 an ounce, which would give them $4.99 trillion more than they currently have. Then, under Section 2.1, the Treasury issues gold certificates to the Fed, which then credits the Treasury General account with $5 trillion. Then, the Treasury could use the $5 trillion to pay down the national debt from $37 trillion to $32 trillion. But this requires full congressional approval to actually happen. So what happens when you inject $5 trillion into the economy? It's going to create massive inflation. The Fed will have higher prices and interest rates and will force them to do yield curve controls, which would expand their balance sheets and drive CPI even higher. The yields on bonds would spike, and it would force the Fed into buying their own treasuries to cap long-term yields. And this is what I'm calling the policymaker's doom loop. It would set off an event that would feed itself, and it would not solve the sustainability issue of debt. In fact, it would make it worse. Now let's move on to stablecoin. There was an act, the Genius Act. Look it up. Donald Trump signed it. It forces every stablecoin created to be backed by cash or treasuries. Currently, stablecoin market sits at about $250 billion, and it's way too small to absorb any realistic and effective amount of debt that the U.S. currently holds. Even if they were to issue up to $1 trillion by the end of next year, which is the actual forecast, it would not scratch the surface on the $37 trillion debt. They would need to somehow expand the stablecoin market to 10, 20, 30 trillion dollars, back all those dollars with treasuries, and then devalue those treasuries. And I just don't think that's possible. The chances of that happening is pretty much under 1%. Typically, to protect yourself against these types of events, you would go and diversify into commodities, into equities, into gold ETFs, Bitcoin ETFs, audited stable coins. But if we look at the market and what's happening in today's market, gold seems to be the one that's driving a lot of gains. My suggestion is that you diversify between ETFs that hold physical gold and ETFs that hold gold miners. This way, your gold portfolio is not just determined by gold prices. Usually gold prices move slower, while gold miner stocks move much quicker. Just to give you an example, in 2025 so far, gold miners' average return was 99%, and gold itself average return was around 36 to 44%. We're talking about ETFs, not that you're holding physical gold. So make sure that you're always hedging your risks. And if you don't know what you're doing, make sure you consult a professional. This is your hard-earned money, and you should protect it. Thanks for watching my channel. It's a new channel, and I'd love your support. I'm your host, Ali, And if you like this type of content, subscribe, like this video, and share it with other people so that we can control this massive panic that people are going on about. Until next time, stay diversified, stay safe, and I'll catch you in the next video.